Good morning, Jags. This is Fahad. Today is Friday, October 23rd. Let's get started. One stock that I am watching this morning, and I would like to see this thing pop next week when it reports earnings, and it's Tech Resources, symbol TECK, Tech Resources. Recently in chat room, we have covered plenty of times that this company continued to see strong, healthy accumulation in call options in various months and strikes. If you go to the option chain specifically, we have seen some short-term call buying where the open interest has increased dramatically in the October 30th weekly, as well as further out in November months. And specifically, if you go to the January 15 call options, we will see over 35,000 open interest over here. And if you zoom into this, you will find out that mostly since the beginning of September, we have seen steady accumulation in this name. So for example, the open interest was only 15,000 here, when last time on September 2nd, we saw large blocks of buying call buying came in the January 15 calls. More than 10,000 were bought that day. The open interest jumped. And then a couple of weeks later on September 16, they came back and they bought more. The open interest jumped again. So basically, since the beginning of September, the call open interest in January 15 calls has more than doubled, and those positions remain firmly over here. And other months have seen similar kind of action, including all the way out to January 2023 at the 17 strike calls as well. And if you go back to the chart now, you will see that this thing has a sharp rally, very sharp rally on very heavy volume. And then for the past month or so, it has been consolidating in a tight range. I believe this is a coil chart over here, and I would expect a breakout through $14 to $14.20 and a potential start of new leg higher, which should carry Tech Resources to $16 per share. There's an air pocket up to that level, and if it crosses that, then I think we see $7 to $18 per share. And so that's the technical view. Here's another way of looking at it. If I simply increase the view of this chart, you will see very tight bull flag consolidation continues, and the stock has started to gradually make higher highs and higher lows. We'll see if it's going to punch through 1420. If it punches through 1420, then I believe we see easy 10 to 15% upside in Tech Resources rather fairly quick. Now, with all of this said, on a high level, need to keep in mind that the reason for excitement in this one is simply comes down to the same core thesis and theme that we have been highlighting, which is growth to value rotation, which has played out significantly with significant outperformance in lots and lots of stocks. We have seen all week long relative strength in miners, in chemicals, in transportation, in industrials, all of those names. And why is that? It's mainly because globally, when you look at the manufacturing PMIs, they gradually trend, they're trending higher. I mean, almost all the major economies in the world have basically now flipped back to above 50 line in the manufacturing PMIs. Some may stall over here because of rising COVID infections, but as long as they're staying above 50, that means expansion phase. All right. The ISM data told us the same thing. The last data in the US that came out, the PMI manufacturing data told us the same thing. So there's that. And the second reason for this excitement continues to be about hopes of large fiscal stimulus, whether it comes before elections or after elections. I think what's already a given is that we're going to get one. It's the matter of the size of the fiscal stimulus, which we are not aware yet, because that depends on the actual election outcome. And that election outcome will continue to change as the polls and the batting patterns are changing before November 3rd. But whatever, it's the size that is unknown. But I think everybody can believe that there is going to be a fiscal stimulus deal at some point sooner or later. So that's the fundamental view. But then also specifically drilling down into the company, some things to keep in mind is that this company will report earnings in next week on October 27th. This morning, Credit Suisse is raising its third quarter EBITDA estimates higher by 13%. So Credit Suisse ahead of earnings is moving up from $567 million in EBITDA estimate to $640 million. And then they also, I quote over here, they also say in their earnings preview, they say we remain bullish on met coal prices. The empirical data is clear that mining equities are highly correlated to commodity price trends, and the strong recovery in copper prices has supported much stronger recovery in FCX, which is Freeport McMoran share, relative to TECK, given its coal exposure. While the recent issue of China ban on Australia coal might undermine prices for a quarter, we continue to remain bullish on met coal, and our forecast price recovery over the next 3 to 6 months provide a unique correlation trade for TECK resources as well as steel. Historically, coking coal has shown significant upward volatility in the event of supply disruptions. Strong demand recovery scenarios given relatively illiquid spot market, especially in the premium HCC market that TECK operates in. Most important line in this note from Credit Suisse is that if you look at copper futures, that's copper futures. Take a look at this beautiful trend in the copper futures that continue to break out. And you can see as recently as 2 days ago, they were hitting a new 52-week high. And if you look at the longer term chart of copper futures, here's a 5-year chart. You can see how much copper futures have gained strength in the last couple months. Basically, we're about to take out a 5-year high. Copper futures are attacking a 5-year high. And why is that? It goes back to the same point that I've been making, where the inventories are tight and basic commodities basically always outperform in the periods of an early recovery cycle, and that you're playing out. I would also like to point out 2 more things on TECK resources, where if you look at the long-term 15-year chart of TECK resources, here's a glaring example of how the basic commodity or base metal stocks tend to materially outperform during the early part of the recovery. You can see right here after 2008, for the next 2 years, this stock just kept going up and up and up. And then similarly right here, when we had the last economic downturn, which ended in 2016, summer of 2016, base metal prices or base metal stocks simply continue to move higher sharply. And here we are again. And I would expect that given the firming of prices in copper, iron ore, and everything, and steel prices, TECK resources will continue to perform. And last thing, if on this one stock, this company has a very interesting mine for which this is a copper mine, for which the production went into effect earlier this year. This is called Quebrada Blanca Phase 2. Okay, this is based in northern Chile. Okay, and this mine, phase 2 of this, finally went into production at the beginning of this year. Why do I bring this up? Because most people probably don't realize this, that QB2, they call this, provides TECK with a very, very capital efficient copper unit economics for the next whole 10 years. How strong is that? The copper unit economics of mining puts the OPEX or operating expenditures plus all the long-term cost absorption of this at only $1.38 per pound for the next 10 years. So this is an extremely profitable high margin business that kicked in for TECK resources all in early part of this year. And it's all copper. 2 things are going to happen. First, this is going to change the mix of the company's total revenue mix from less and less dependent on coal and more dependent on copper. And secondly, it's going to do so at a time when copper futures are breaking out and reaching 5-year high, while this project, a very large project, has very efficient economics of unit cost basis of only $1.38 per pound, while copper futures are trading at right now, as I said, at 5-year high or $3.15 per pound. So that's a very important thing for TECK resources that's going to play out in the benefit of this company over the course of next 10 years. And I believe the company will talk about these unit economics when it reports earnings on October 27 before market opens. And Jay is not here today with us. Jay is taking a very well-deserved break, spending time with the family. He will be back next week. And so let's go straight to Chronicle. Hi, Chronicle.
Morning, Fahad. No setups this morning, but I'd like to give a more in-depth preview of the next Jaguar investing idea, which is St. Joe Company, symbol JOE. This is a Florida-based real estate developer with a massive existing land pipeline across suburban Northwest Florida along the Gulf of Mexico. So we're talking the areas that are around Panama City Beach, Tallahassee, and Santa Rosa Beach. So this company has a pretty
I'm
interesting
sorry,
history.
what's the stock?
JOE.
JOE, yes, St. Joe. Okay.
The company has a pretty interesting history. We can actually trace its roots back all the way to an internal tax dispute within the famous DuPont family. I'm sure everyone's heard of the DuPonts. So St. Joe actually started out as a paper company back in 1936, but at the same time, they were gathering a lot of cheap land as a result of the Great Depression. Like we're talking a couple dollars per acre. And even though they were just a paper mill at the time, they became the largest private land owner in all of Florida at one point. Then in the late 90s, they decided to do something with all that land because all that bare land didn't generate any cash flow. And so they converted themselves into a real estate developer and sold away the paper business. Now, because the CEO that they brought in during the late 90s, they have an interesting sort of contrarian philosophy when it comes to their housing projects. Fahad, you know how developers tend to stick with a target demographic with their projects, right? Like, for
Correct.
example, some projects are meant for young single professionals, others are maybe meant for senior retirees, and then some are meant for families. St. Joe is sort of different because with a lot of their projects, they have this theme called multi-generational living, where they have this theory that people don't want to be segregated. Instead, they believe what makes a fulfilling and happy community is when people of all ages with shared interests are living with one another and forming support for each other. And they're making this bet that as the boomer generation retires, they're not going to be as willing as the silent generation in living out their remaining lives in retirement homes. Instead, they're going to move to suburban communities that are in close proximity to everything they need. And at the same time, as the younger generation begins having families, they're going to move away from the metros. And then that's when you have both sets of young and old demographics converging on these multi-generational living communities that St. Joe is building. Additionally, each of their residential projects have a different theme. Like one such community is for nature-loving people, another one is for golfing fanatics, and this other one is for people who love the seaside, and so on. So going into this bull case, I'm not going to go into everything today, but I'll just preview a fraction of what we'll be talking about. Like on this current first slide, if you remember, we talked about the ongoing secular housing theme when we covered Louisiana Pacific and the Q3 outlook, which is
Yep.
now unlocked. Now, if this is a long-term theme that hasn't gone away, housing in the US, especially the affordable kind, still remains in undersupply. And as we can see, home builder confidence is still going strong. Because for years and years, after the GFC and the housing bubble, developers were just too scared to build. Now, one of the main counter arguments to this is that there is just not enough land set aside for housing development, and that's contributing to the shortage. But if we go to the second slide, as I mentioned, St. Joe does not have a land shortage. This is one of the biggest landowners in Florida, and they currently have about 170,000 acres set aside for new projects. And so this table here that I made basically summarizes all the projects they have currently. And then below that, I've marked out their locations on the map. And then I've also marked out in dark pink the areas that the company will be focusing on in the near future. So this is one part of the bull case. We'll detail the rest when we get to the video. And then on the last slide, we have the monthly chart of the stock. As Fahad likes to say, the bigger the base, the higher in space. This is a multi-year base we're talking about. And right now, we're attacking a very important level of $27, which has acted as both resistance and support over the last 20 years. Now, you may be asking why the stock has been dead money for the last 10 years. Several reasons for this, which the company has dealt with. One of the issues was that way back in 1930s and 40s, the company was over exuberant in buying land Like they were even acquiring a lot of redundant remote forest and swampland, which had no value. And so that had been a long-standing drag on the portfolio, especially after the GFC. But the company has been dealing with that by divesting away a lot of that useless land, especially in 2014. And so the portfolio is much cleaner these days. The other headwind that's been pressuring the stock is mismanagement. St. Joe went through a couple of CEOs within a short space of time during the last 10 years, the early part of the last 10 years, and their 10 years didn't work out. The company also allegedly got into some scandals which resulted in out-of-court settlements. David Einhorn was short the stock until 2016 because of all this, but they've cleaned up their act under the current CEO, who's taken the position since 2015. And he's been with the company for almost 30 years now. He's slowly taking the company back to its successful roots under that original CEO in the late 90s. Fast forward to today, this has potential to be a turnaround story. So we're aiming to have this next video ready by early next week. And we're going to be covering the entire bull case, macro and micro, as well as companies' financials, which are very strong. And lastly, where we think the stock could be headed. Right now, I'm still hoping for more of a pullback. Home building stocks have been acting weak recently, most likely because of knee-jerk reactions to the 10-year and 30-year Treasury yields going up. But I think the market is forgetting that the actual rate to the consumer is not really increasing as much. So I think these pullbacks in the home builders are temporary.
Yeah, excellent preview there, Chronicle, and looking forward to doing that presentation for the investing, long-term investing series for Jaguar Media next week, in which, and folks, just a reminder, when we do those, we always provide not only the actual presentation, but the entire write-up, and the slide deck is also attached with it, so you can go through all of it, and you can either watch the video or you can just read the write-up and get the full picture. Very interesting over here. The company has so many different projects just in Florida alone. Many of them continue to remain undeveloped. The one thing that I will just add, Chronicle, is that aside from what is already a very, very strong chart, most of the time we have noticed that home builders in general, they tend to trade somewhere between 1 to 1.5 times book value. And that's a framework for them, much less, and based on the market conditions and the growth rate, sometimes they go to the upper end of that, sometimes they go to the lower end of that. If you look at Toll Brothers today, that trades about 1.5x. If you look at Lennar today, same thing, trades about 1.5 times book value, because it's very easy to value a lot of the home builders based on the assets that they have on the books. The land prices and all of those are easily determinable. In this particular case, JOE, just be mindful that this company is above the market trends already. The book value versus where the share price is trading at almost 3 times its book value. Maybe this is actually a testament of what to come from this company, because as the company builds out all those projects in Florida and rides that beautiful wave that's happening right now in the home building section, maybe the market is already starting to price in what the future will look like for this company. And this has been a phenomenal run in the last couple of weeks. So just wanted to point out on the relative basis where the valuation stands. Usually in the short term, it doesn't matter, but in the long term, they do tend to matter. All right. So great stuff. Looking forward to doing this video with you next week. And that's it from us. We will see you in the chat room shortly.